So after the market has a major drop like it did last year, a lot of people tend to be scared of the market, and a lot of times kind of make the wrong moves. This is the time where it's going to be important to make the right moves. And so when the market breaks out of a downtrend like it has, it always climbs a wall of worry. So we're going to get into the details. Stick with me. My name is Brian Cannon, and welcome to Markets in 5. All right, I'm going to go through 3 charts today, so let's dive in. This first chart here looks familiar. We've seen it a lot, but essentially the downtrend of the S&P over the last 12 months or over the course of year 2022. And you can see a breakout here. So that's very, very positive. Now, if you look back at 2021, you saw the S&P rising. And during that period of time, you saw the majority of the time, the RSI reading was above 50. And so that kind of indicates that it's a good trending, healthy market, right? And then if you look at basically all of 2022, the market stayed in the lower end of this RSI reading. And that basically, there were some periods that popped above it and came back down, but ultimately spent a lot of its time down in the lower quadrant of the RSI, which indicated the market's not good, right? So now look at it. We've had the RSI is hanging out on the upside. We've had this breakout. We've basically taken out this downward trend, and the MACD is supporting this move. So on top of that, we've had what's called a golden cross, where we had the 50-day moving average cross above the 200-day moving average. That's a very, very basic technical indicator, but there's a lot of kind of attention placed on it in the news and kind of retail investors. So, but it is a bullish sign. So, if I were to just not think about 2022 and the damage, and not think about the job losses and the recession, I would say this market is a breakout. So this next chart is just a blown up version. So again, I think things are a little bit overbought at the time in the very short term, right? I think that more than likely these are levels of resistance that we are watching, but at the same time, they can continue to kind of work their way up there over time. So, again, that wall of worry can do a lot of damage for folks if you let it impact you. So it's not to say that you're going to avoid volatility. I mean, the market's going to be very volatile this year, and you just kind of have to face that fact. But if you put your head in a hole, this market, I think, could run away from you, or at least melt away from you. So, but again, I do anticipate a little bit of a pullback, potentially testing this downtrend line, and if it does that and holds it and takes off, that's a very, very good, very bullish sign. Now, if it comes back down, can't hold it, and breaks down, that would be bad, and we would need to raise cash again. But right now, we've had the bullish breakout, and it looks good. All right, so if we take a look at the Nasdaq, during 2021, the Nasdaq was rising, right? However, the breadth measures that we follow were dropping, right? So the number of companies above their 200-day moving average was continuing to fall as the market was continuing to rise. So generally speaking, that's not sustainable for very long. So, it did happen for about the better part of 9 months where that divergence was taking place. And then it finally in 2022 kicked in. And so the companies and the breadth continued to drop, but then the market kind of realized that and started catching up. Now, in basically mid 2022, you're starting to see a different divergence, right? It's more of a bullish divergence, where the market is still technically trending lower. However, you're seeing more and more companies get above their 200-day moving average. So that's a very bullish sign of participation in the market, and it's a measure of breadth that we watch. And so this is now correlated with a breakout in the overall trend. So, when you look at the S&P breaking out, the Nasdaq breaking out, that's great. When you turn on the news, and it's a huge wall of worry. So sometimes it pays just to turn the news off. So I've been doing this a long time, and it seems like the market always climbs the wall of worry. It doesn't matter if it's a bear market, coming out of a bear market, or at the top of a bull market. So there's always some concern about the sustainability of the market trend. So as of right now, the market has broken out. So it's got to prove a few things to make sure it can hold this breakout and continue higher. But if it does, you've got to jump on that wall of worry and ride it with it. So, but if you have any questions or need anything, give me a shout. My name is Brian Cannon, and I'll see you on the next Markets in 5.